It's Wednesday, the 12th of July 2023. Today's video is going to be a special group focus on the Semiconductors group, following up on what's been one of the leading groups of the year. Last did a actual group focus video on it back in the early part of February, a couple of weeks after the stage 2 breakout, which highlighted in the blog at the time. And it had been a heavy feature through the watch list scans in the prior months to that. So I think with earnings season approaching, especially with the semiconductors earnings kicking off tomorrow with AEHR, and then we've got the next 4 or 5 weeks or so with more earnings from the group, where the majority of the stocks in the group will be reporting. So with it consolidating, currently up at the highs with a 5 weeks, very tight consolidation at the moment. It being right at the 2021 highs, but today would be a good opportune time to follow up on the group, see how the stocks have advanced in stage 2, whether some have obviously fallen out of that or not, and how it's sort of going overall. So beginning with the group ETF, which is the SMH, there are a bunch of group ETFs. If I quickly flick through to the page, so this is a VanEck SMH top 10 holdings, for example. Here you can see this has Nvidia, Broadcom, ASML, Taiwan Semiconductor, Advanced Micro Devices, Texas Instruments, Intel, Qualcomm, Applied Materials, and Analog Devices. So they make up almost 75% of this ETF. So it's quite heavily weighted in just these 10 stocks, with Nvidia and Broadcom and ASML and Taiwan Semiconductor making up almost 40% of that on their own as well. So it's fairly concentrated. There are other ETFs that you can use for the group. Obviously the SMH is the largest of the two major ones here. SOX is the iShares Semiconductor ETF. It's also fairly large. And then SOXL was a 3 times version, but XSD is another 1 times version, which is the spider version of the semiconductor ETF. And then there's the First Trust FTXL as well. You could use also the SOXS for the 3 times bear, and there's a bunch of others. So just wanted to highlight the fact that there's multiple ETFs for the group. Not all groups have ETFs for them, so it's one of the better covered groups, as it's quite a obviously popular area of the market. So coming back to the weekly stage analysis chart of the SMH, obviously this covers the last 3 years here. We've got since the COVID lows, where it had the shakeout, quick stage 4 decline, flipped back up into stage 1, and then started to break back out again into stage 2. So a bit of a different time through that period, as most of you know that traded through it. Obviously big quick V bottom shakeout, so not your typical stage 1 bases breaking back out into stage 2. It was a lot of stocks or groups were already in stage 2, had a quick shakeout, and then recovered back through stage 1, and then immediately back into stage 2 again. So one of the good things about semiconductors, which has happened and why it's become one of the leading groups, is that it didn't have that bell curve look to it that some people I see post on FinTwit a lot when they're showing the stage analysis method. They show the big bell, or it goes all the way up and comes all the way back down again, with obviously stage 1, stage 2, stage 3, stage 4, and then back into stage 1 again. And then they're looking for these kind of stocks. This is not the pattern we want to look for in stage analysis. We actually want to see what we're seeing here, where you can see with semiconductors the entire advance from the low back in stage 4 here all the way to the top of stage 3, and then you can see the low in stage 4 in 2022 only came down a little bit below halfway point on this. This is a logarithmic chart, so it did go a bit further than that. It was into the 60 to 70% range of that. But you can see the overall pattern is more like an S shape. So you go up into stage 3, come down into stage 4, and then you start to curve back out and up again. So this is what we're actually looking for in stage analysis. We don't want to see a dramatic stage 4 decline where it gives up the entire move and comes all the way back down to here. So some of the more extreme sell-offs in the tech stocks where the software names, etc., have seen this kind of move. And obviously a lot of those are very long way off their highs again. You've got the likes of ARC, which is all the way down in this kind of area, whereas the semiconductors are pushing to attempt to new highs. So I did talk about this a lot at the time as the stage 4 was happening in 2022, and that this is the kind of behavior we'd be looking for on the flip side in order to look for new leading groups. So as I said there, you don't want to be looking for the bell curve shape. You want to be looking for that more S-curve shape where it doesn't give up its entire stage 2 advances. It shows that there's institutional support in the group, whereas if it gives up the entire move, it shows a lot more weakness in the group. So obviously relative strength has been a big proponent of the semiconductors group, and at the start of the year we started to break out into early stage 2 here. This was the end of January week. I think it was the 23rd of January, around that sort of time. I think Nvidia was breaking out on the same day or the week before, so there wasn't a lot of volume in the group ETF at the time. Doesn't necessarily matter in the groups. You can see the Mansell relative strength here. So the zero line was flattening. You can see obviously the relative strength was outperforming dramatically at that point compared to the S&P 500. So way above its flattening zero line, which is what we want to see at stage 2 breakout. It obviously shows immense near-term strength there. We've had 25 weeks now since this broke out into stage 2, so we're almost 2 quarters in to the stage 2 advance. Your typical patterns with stage 2 is early stage 2 is sort of roughly 1 quarter, and then the second quarter and the third quarter are just a normal stage 2 advance, and then beyond that we get into the later part of stage 2. You're not necessarily always going to get that far. Obviously could top out here. We're at the top of the stage, the 2021 highs here. We're consolidating around the highs. Could obviously top at this point, roll over and start to come back off again. But so far, you can see on the consolidation, the volume has been drying up. It's been a very tight consolidation. So since this obviously last pivot low here, it's only pulled back, I think it's about 6%, and it had a 30% or so run there. So it's only roughly pulled back about 20% of its prior advance, so showing a lot of relative strength. We see contracting volume here. So far ahead of the earnings, we're seeing constructive behavior with obviously not a lot of people offloading their shares here ahead of the earnings. If we go to the daily chart, you can see price action a little bit more closely here. So since the stage 2 breakout, had fairly typical run in stage 2. We have quite a lot of stocks and groups do this kind of behavior where you move out into stage 2, have some kind of backup where it pulls back in towards the breakout levels, starts to push back out again. And a lot of the times you see some kind of early base structure develop for multiple months, often a quarter or more. So you can see here initial base structure after the stage 2 breakout where it didn't make an awful lot of progress, and then started to make a bit of more momentum. We had a near-term preliminary supply come in here, volume spike, and then started to run up into the buying climax we've seen recently. Automatic reaction, secondary test, start of a base structure developing across here. So further testing at the moment. We've got an undercut and rally move at the moving average. And now it's rallied back above the 180R level. So it remains in a short-term uptrend. You can see the majority of the price action at the moment, as we define a short-term uptrend, is above the 180R level. So you can see that line I've just drawn there is the 180R level. We've been above that for the majority of the time. You can see now we're starting to chop around that level and move around. So as we've started to form the near-term base structure here. Again, if I zoom in on the time frame here a little bit, we drop down to a 195-minute chart briefly. So you can see the stage 2 advance since May on the 2-bar a day chart. So intraday time frame, if I add the force index to this, give you a better idea of what's going on with the volume and put it behind price, give it a bit more visual impact. You can see that initial preliminary supply move up here. We had a strong volume move, see exceptional force through that point. then ran into the near-term buying climax, the automatic reaction secondary test area, and started to build the base. You can see these pullbacks have been on fairly normal volume here. It's nothing too dramatic on the pullbacks compared to obviously the rally that's ran up into there. So far, it's developing as a reaccumulation ahead of the earnings results. Obviously, that could change. We could suddenly have an upthrust, could come back in. We could suddenly get a big spike to the downside in the false index and show some distribution through this area. At the moment, hasn't happened. So again, we remain in reaccumulation base structure in the near term ahead of earnings at the moment. So far, so good as such. Go back to the daily chart on that. Right, let's move on now to the breadth for the group. So a key part of stage analysis method, one of the reasons for doing this, and especially doing a review as we get into of one of the leading groups as we move into earnings season, and obviously after 6 months of it being in stage 2, is we want to assess the quality of the group. We want to see if it's going to continue in stage 2 or not. This is a big part of the methods forest of the trees approach. I know I talk about this sort of ad nauseum, as Stan likes to say, but it's a very, very important factor. Group strength is obviously key with the stage analysis method. There's obviously hundreds of groups. At times we track the 104, 105 DJ and US industry groups on the website each week. So of those, there's been a few key groups that have led us through the year. From the home builders was our early leader and has been an exceptional stage 2 advance. Obviously not dramatic in terms of performance, but it's been consistent, and the entire group has been moving strongly higher in stage 2, whereas the semiconductors, software, have been two of our other areas that have been exceptionally good through the year, with lots of stocks developing through stage 1 into stage 2. We're now seeing in the software names, especially, we're starting to see the laggards from the group starting to break out into stage 2 as well, as that group also consolidates in stage 2. So it's not near its 2021 highs like the semiconductors group here, but it is showing constructive price action as well. So these group themes are a big part of the stage analysis method, and obviously one way to look at to help with the group themes is to assess the internal breadth metrics. So from the semiconductors group here, I'm using Investors Intelligence data on this one. We've got the percentage of stocks above their 30-week moving average for the group, which at the moment is at 76.29%. So up here we made a higher high today. So you can see we had a shakeout move at the end of April there, starting to rally back up strongly into May. So it got back all the way back down to 20% in April, and it's now rallied all the way back up to 76.29%. So you can see back in 2020, 2021 time, the majority of the price action was in the upper half of the chart here. So this is the midpoint, 50%. So you can see until the start of 2022, we didn't get a drop down towards the lower zone here. All of the stocks in the semiconductors group were 50% or greater were in the upper half. So at the moment, we've had a first pop above that at the start of the year with the January move, and now we've got this secondary move now where we're starting to move back up into that upper zone and above the 60% level. As I say with the breadth each week, the 60 to 100% range is our more bullish zone that we want to see them in when we're looking at the percentage of stocks above their 30-week, their 10-week, whatever kind of data. This is our upper sort of range, and when you're in a bull market, they tend to live in the upper zone with only a few brief moves to back towards the middle every now and again. So, and as you can see, during the bear market, it lived in the lower half of the table through 2022. And then as the stage 2 breakout happened through January, it started to move back into the upper zone again. So fairly big shakeout on that April move in the group. But obviously now we've got almost just over three quarters of the group now above the 30-week moving average, which means like they're in either stage 1 or stage 2. Some might be in stage 3 as well there, but they can't be in stage 4 if they're above their 30-week moving average. So there might be the occasional odd one, but it's rarer for a stock to, if it gets back above its 30-week moving average, then we would then start changing that to stage 1 again. So generally, you're only going to be in majority of those stocks, the 76% there, are going to be in stage 1 or stage 2, with a few in stage 3 as well. So if we look at the percentage of stocks above their 10-week moving average, also here, that's at 80.41%. So again, that's had a strong rally since April, back up into the upper range here. Obviously, this one's a lot more choppy because it's only above 10-week, the /50-day moving average. So only measures a few months of price action. So this one's in the strong zone as well. We want to see it hold up in there. Look at the point and figure chart of the bullish percent. So this is the amount of stocks on point and figure buy signals in the group. So you can see this is at 65.26% at the moment. So it's got back into the upper range above the 60% level there. Is 60 over here, but we're obviously not into the higher risk upper zone. So with the bullish percent, when you get into the upper zone, you're then into a higher risk area, and then you're looking for when it reverses back down again. So we're in a column of X's at the moment, so it's on offense since 7 there means July. So you can see 5 is May. So we reverse back down. There's the April sign 4. We reversed that down to the lower zone in April, flipped back up in May to the start of June there, and then it's reversed. But you can see the consolidation has been tight. Now we're holding in that 50 to 70% range at the moment. So still holding up fairly strong. So overall, the internals for the group at the moment are leaning on the bullish side still, as the group is consolidating near those 2021 highs ahead of earnings season. So far, the breadth is looking fairly positive there. If you want to calculate your own breadth metrics, obviously Investors Intelligence is a paid-for service, so you can do it in the likes of stock charts if you've got that, and obviously many of you do. Not so sure if you can do it in Trading View. You won't be able to get the point and figure signals from that. It's one of the reasons I use stock charts, is obviously its point and figure charting is excellent. So in the advanced workbench, the scan workbench in stock charts here, you can obviously run this kind of scan. So you can search for the group. And group is semiconductors. So with those, you can just scan through these, find your semiconductors group, add that to the chart, then that will give you this. So these are, if you want to check how many stocks are above their 30-week moving average, you can see the code for that here. And then if you want to check how many are below the 30-week moving average, so that's below or equal to, then you would turn that one on. So for example, here at the moment, if I run this scan, you'll see there's 77 stocks at the moment above their 30-week moving average there. And if we run how many are below or equal to, you can see we've got 16. So it's 93 stocks in total there. So 77 divided by 93. We've got 82.7% of stocks in the Dow Jones Industry Group's scan here above their 30-week moving average. So obviously very strong again with that. So stronger than we saw with the Investors Intelligence one. If we turn that off, if you want to do the bullish percent version of this, you need to do the point and figure buy signal is true, and then you can see how many in the group, and you need to do the point and figure sell signal is true to get the opposite way. So you can do that from the PNF patterns. Just go into here and find PNF buy signal. So if I turn this one on, might give us a slightly different number here. So we've got 62, and then we go back. Do the PNF sell signal is true this time instead. We've got 33. So showing a slightly different amount of stocks in the groups, 95 there. So 62 divided by 95. So 65.2%. So as you can see from, it's basically identical to the Investors Intelligence one here, which is at 65.26%. So that's one way. If you just want to know the figure, you don't necessarily have to see the chart, as obviously seeing the chart can be helpful, but just with market breadth for the group, sometimes it's just useful if you're checking out a group or you're doing your own analysis on a stock. You just want to get a rough idea of what the group is doing. You can go through, see how many are above the 30-week moving average, see how many change that to see how many are above the 10-week moving average, see how many are on point and figure buy signals, etc., and then get your percentages. And if that's all in line, then obviously that's then helps you make your decision about whether you're going to trade that stock or not. And this is something that hopefully I'm going to be bringing with the SATA indicator that we're building at the moment. So that is progressing fairly well at the moment. So starting to get onto building the screens now. So I'm hoping that we'll have something more useful to use in the coming months here. So right, let's move on. Let's get into the individual groups, stocks. Sorry, not groups. Individual